Which of the following factors is most likely to cause an appreciation of the Indian rupee against the US dollar? Here are your options. A. A sharp rise in crude oil prices. B. Increase in foreign portfolio investment FPI inflows into India. C. A widening trade deficit in India. Or D. RBI aggressively buying US dollars in the Forex market. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Higher FPI inflows increase demand for INR, causing its appreciation against the USD. In a currency pair, what does the term quotation currency refer to? Here are your options. A. The currency whose price is being determined. B. The currency that remains fixed in value. C. The currency that is always the US dollar. Or D. The base currency in any currency pair. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The quotation currency, also known as the counter currency, is used to express the value of the base currency. What was the primary reason for the collapse of the Bretton Woods system in 1973? Here are your options. A. The introduction of the euro replaced the system. B. Countries were unable to maintain their fixed exchange rates due to excessive inflation. C. The US abandoned the gold standard and moved to fiat money. Or D. Global trade shifted towards cryptocurrency-based transactions. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The collapse of the Bretton Woods system was driven by the US decision to end gold convertibility, leading to a fiat currency system. If a central bank follows a managed float system, what kind of intervention is it likely to make in the Forex market? Here are your options. A. It completely fixes the exchange rate of its currency. B. It allows the exchange rate to fluctuate freely with no intervention. C. It eliminates all foreign exchange reserves to influence the exchange rate. Or D. It intervenes occasionally to control excessive volatility and ensure stability. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. In a managed float system, central banks intervene only when needed to control excessive volatility. Which of the following is not a reason why USD is the most widely traded currency in the Forex market? Here are your options. A. It serves as a reserve currency for many central banks. B. It is a preferred vehicle currency for international trade. C. The US has the highest GDP in the world. Or D. Most commodities like crude oil and gold are priced in USD. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. While the US has a large economy, the dominance of USD in Forex is due to its role as a reserve and vehicle currency. How does a pegged exchange rate system impact foreign investors? Here are your options. A. It provides stability and predictability in exchange rates. B. It increases the risk of Forex fluctuations. C. It allows full flexibility in determining exchange rates. Or D. It eliminates the need for central bank intervention. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. A pegged exchange rate creates stability, making it easier for foreign investors to plan their investments. If the USD INR spot rate is 83.50 and the forward rate for 3 months is 84.00, what does this indicate? Here are your options. A. The INR is trading at a premium. B. The USD is trading at a premium. C. The USD is trading at a discount. Or D. The forward market is inactive. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. A forward rate higher than the spot rate means the USD is at a premium, implying expected INR depreciation. In an FX market, A bid price is the price at which a bank. Here are your options. A. Buys the base currency. B. Sells the base currency. C. Buys the quotation currency. Or D. Sells the quotation currency. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The bid price is the price at which a bank buys the base currency from a trader. Why do central banks sometimes intervene in foreign exchange markets, even in floating rate systems? Here are your options. A. To manipulate currency values for political gains. B. To stabilize exchange rates and prevent excessive volatility. C. To eliminate the need for foreign reserves. Or D. To ensure permanent appreciation of their currency. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Even in floating systems, central banks intervene to stabilize exchange rates and control extreme fluctuations. What happens if an economy experiences rising inflation and falling interest rates simultaneously? Here are your options. A. The currency is likely to depreciate due to reduced investor confidence. B. The currency will appreciate as lower rates attract foreign capital. C. The currency remains unaffected as inflation and interest rates balance each other. Or D. The exchange rate will be fixed automatically by market forces. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Higher inflation and lower interest rates reduce a currency's attractiveness, leading to depreciation. If an Indian exporter receives payment in UR but needs INR, what is the best hedging strategy? Here are your options. A. Buying a Euro INR forward contract. B. Selling a Euro INR forward contract. C. Buying USD INR futures. Or D. Holding Euro without conversion. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Selling a UR INR forward locks in a future INR conversion rate, protecting against UR depreciation. What is a major risk for a country with a pegged exchange rate system? Here are your options. A. Loss of monetary policy independence. B. Excessive currency appreciation. C. High Forex market volatility. Or D. Unrestricted capital inflows. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. A pegged exchange rate limits the country's ability to use monetary policy independently. Which market participants are responsible for determining interbank forex rates? Here are your options. A. Central banks only. B. Hedge funds and large corporations. C. Commercial banks and financial institutions. Or D. Retail traders and small businesses. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Interbank forex rates are determined by commercial banks and financial institutions engaged in large-scale currency transactions. What role does the Clearing Corporation of India Limited, CCIL, play in India's forex market? Here are your options. A. It regulates foreign exchange trading. B. It provides settlement services for forex transactions. C. It sets the USD INR exchange rate daily. Or D. It acts as India's central bank. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. CCIL facilitates forex trade settlement, reducing counterparty risk. If USD JPY is 115.50 and JPY INR is 0.65, what is the approximate cross rate for USD INR? Here are your options. A. 74.50. B. 92.0. C. 85.0. Or D. 77.50. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. USD/INR equals USD/JPY times JPY/INR. Right pointing arrow. 115.50 times 0.65 equals 77.50. What is the primary purpose of an NDF, non-deliverable forward market? Here are your options. A. To allow trading of illiquid currencies in offshore markets. B. To facilitate physical delivery of currencies. C. To enable central banks to control exchange rates. Or D. To eliminate foreign exchange risks for banks. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. NDFs allow traders to hedge currencies that have restrictions on direct trading. If an investor expects INR to appreciate, which position should they take in USD INR futures? Here are your options. A. Long. B. Short. C. Buy a call option. Or D. Buy a put option. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. A short position profits from INR appreciation as USD INR falls. Which event is most likely to cause a sharp appreciation in a country's currency? Here are your options. A. Large-scale government borrowing. B. A rise in trade deficit. C. Increased foreign direct investment FDI inflows. Or D. A cut in interest rates by the central bank. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Higher FDI inflows increase demand for the local currency, causing appreciation. What is the impact of rising US interest rates on global Forex markets? Here are your options. A. Increases capital flows into emerging markets. B. Strengthens the US dollar as investors seek higher returns. C. Weakens the US dollar due to inflation concerns. Or D. Reduces demand for USD-denominated assets. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Higher US rates attract investors, increasing USD demand and strengthening the currency. What is the FBIL reference rate used for in India? Here are your options. A. To determine official Forex transaction rates. B. To set benchmark lending rates. C. To control speculative Forex trading. Or D. To fix interbank borrowing rates. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The FBIL reference rate is a benchmark used for Forex transactions in India.